All right, so this is week 18 outlook point 2 or outlook number 2. Let's go ahead and start with the British pound futures. As we discussed last time, we were looking for continuation of the bearish price action, which was relayed off of this liquidity draw or this structural action that occurred. Then I talked about the potential opportunities. I think I did opportunities that I was looking for, and as you can see, this is playing out as expected. Aiming for this as the initial target. This was right here. This actual low here was the, I guess, like the very most conservative target, but then we're looking for the low of the actual price leg that exists from this high down to this low. Then we got the pullback, and now we're running lower. So I'm expecting this to be like the price leg conservative target. And then we just point out multiple lows, expecting continuation of the bearish macro bias, which is bearish price action. And we're expecting that this price action or this transition will give us the juice to continue pressing lower. So that's what we're seeing on British pound futures. Now, the counter analysis is obviously we've moved back into the discount side of this bearish range, and we could potentially be looking for a transition to send us back up. But as of right now, it seems that the price action for bearishness is pretty well structured and pretty well defined, and it looks like price is just starting to pick up steam, pick up momentum, and run towards these lows. But we'll see what happens. All right, moving on to gold. Gold has actually given us a little bit of price action here. It's decided to finally break lower, deeper into the discount side yet again. Gave a response, what seems like multiple liquidity draws, really. We had one liquidity draw, two liquidity draws. I think there might have been a high here, possibly three liquidity draws, and then that led to this price action. Still not very interesting to me, I guess, because we're still inside of the range. This thing could break out lower, but yeah, there's not really much to say on gold. I mean, everything on the premium side to me is balanced. As far as I can see, I mean, there doesn't look like much. Yeah, there doesn't really look like there's much of anything. I honestly can see this continuing to chop or actually break the leg. And so I probably will start looking at gold again once it breaks one of these legs. But for now, that's probably just going to be the bias right now, is we're just ranging. So sorry if you're tracking gold at this point. All right, on to the NASDAQ. Well. So we talked about it. We are in a bullish run. And then we got a very interesting point here where we generated the last price leg, which exists from this low to this high. And then I'm going to go ahead and get rid of this. And this price leg was solidified after we had a low unwillingness, and that unwillingness led to the break of this low, which was a part of the impulse phase. So that signified the end of the impulse and the beginning of the pullback. All right, and then that pulled back to mitigate this area of interest, which is a 4-hour price gap. And so because we mitigate that 4-hour price gap, we would be looking for price to run higher for continuation of bullish price action. And as we can see, it did. So the discount side is completely balanced. And then we did run higher, but apparently, and this literally just happened like in the last hour, price decided to not take out the all-time high, or which is also the high of this price leg. What price actually ended up doing was mitigating this 4-hour price gap here. And you can see the response is very, very strong here. So this indicates to me that we could be looking for a transition of bullish price action to bearish price action. But I can't say that for sure until we break, the low of the price leg. But if you want to be more aggressive, really it would be the low of this, or invalidate this price gap. Because remember that 100% of the price gap is still valid. This price gap is completely mitigated for the most part. From looking at it from the 4-hour perspective, just very subjectively, this is completely mitigated, and we have the response. And so now if this is looking for a target, it's going to be this low. And if we need to assess the action that occurs here at this low, or just the action that occurs at 100% fill of the price gap. And if this fails and this fails, oh yeah, this is going lower. And then we'll have, a transition. This is very much foreshadowing and anticipation, but we'll transition from a bullish run, which is I would say this is probably one of the shorter bullish runs after we broke out of the high here, into a bullish range again. And so that bullish range actually will exist. Oh, I'm tripping. That bullish range will exist from this low, I believe, here to that high here. But don't trust me on that right now. I haven't done the analysis too much. I'm just going based off of the last markings that I have to mark or to demarcate the lows, or the most significant low that led to the breaker structure of the previous all-time high and the previous range. All right, so that's what we're seeing on the NASDAQ. Very, very interesting time to be trading. All right, then on the Dow Jones. Woo! The Dow Jones has decided to forego taking out that high. It's decided that it has enough liquidity. And so what we could be seeing here is that price generated, this price action and decided to perform a break of structure. And then that break of structure immediately, failed. Then we had a pullback, mitigated this price gap, and then we're just free falling here, which is, reminiscent of having price act inside of a range. Another thing that I could say is if this doesn't really make sense on the 4-hour time frame, I could go up to like the daily to see if it makes a little bit more sense. And it kind of does not. So this is very interesting. I do see on the daily, and like I said, I rarely do this, but this does look like a price leg here on the daily, but I'm not going to look too deep into that. I'm just going to chalk it up to price just acting a fool inside of a range. It's decided to play off of whatever it played off of inside of the premium. I can't see anything based off of my analysis perspective, other than, this running the high. Then we had a break of structure, then immediately, reversed, pullback, mitigation, and then now we're dropping. That's really the only thing that I can see. I would have liked to see price reach towards this high, but it didn't. I don't see any inefficient pricing objects over here. But yeah, I mean, it is what it is. The NASDAQ is actually cleaner than the Dow Jones for once. All right, moving on. Oil. As we talked about multiple times, the logic played out perfectly. We said price was going to reach towards this high, and now it's reaching towards the next high. Would not be surprised if we reach that by the end of the week. Moving into next week for certain. This is just pure price action logic. Not really much to say here. If you caught this trade, great. Continue holding because it's probably going to be a pretty decent trade. But yeah, I mean, there's not really much to say on that. It's just pure price action. And woo! Live cattle futures. We booming. We have erased the losses. I shouldn't even say losses because, cows are always dying and living. We've erased the price correction that we have, and we have made a new all-time high in the cattle futures market, I believe. Let me make sure I'm not saying anything wrong. Yeah, that is a new all-time high in the cattle futures market. This is great. Might have to go buy me a couple heads. All right, so that's week 18.2. Peace.